So welcome to the 5-minute value investing inoculation. It will take or it will not, but it will be very short. I'm going to briefly explain what value investing is, how it works, why it works so well, and why it's unpopular. So number one, value investing, simply put, is a way of making money when you buy a stock rather than trying to make money by selling a stock to someone else at a later date for more than you paid for it, regardless of its value. And this is a methodology that was created by Benjamin Graham in the wake of the Great Depression and used with great success by Graham and students and followers of his to this day. So how does it work? Well, Graham realized pretty early on when he came to Wall Street that the stock market was driven by two different machines simultaneously. One he called the Wang machine, which is just the motor inside every company producing profits and value quarter after quarter, year after year, decade after decade. And then there was the voting machine, which determined the price, just the stock market essentially. And he realized, well, if the Wang machine is creating all this value and it's not being recognized by the price, then you should be able to make money without very much risk, provided this company is financially sound. You should be able to buy $100 worth of value for $50 or maybe less. So the problem is you have to calculate the value. And the way you do it is you discount estimated future cash flows for a company and your percentage of them as a shareholder. And this is something that may seem esoteric to a lot of people. It's pretty simple math. The classic example is a lottery. If you won $1 million, they said, we'll pay you $50,000 for 20 years, or you can take this lump sum. You have to decide which is worth more. Is the lump sum worth more than the payments, or vice versa? That's the same way you value a company and a stock. Graham added one other twist to it, which was something he called the margin of safety. He thought you should get a 33% discount from the value just in case you made a mistake or you had bad luck. So if the stock was worth $100, you would not pay more than $67. Now, why is it successful? If you think about it, if you bought a $100 bill for $67 and you just had to wait a couple of years for people to realize it was a $100 bill, you'd make 50%. And even if it took 2 years, that's 22% a year. So it's very simple math. It should be intuitive. It's scalable. You can learn it. You can get better at it, unlike betting or gambling. And you can buy anything. There's this misconception that value investing means you can only buy like old economy value stocks. But Graham thought probably 95% or more of stocks were investable at the right price. Every stock is a value stock. Every stock, even if it doesn't make profits, potentially has value. So value investing simply means that you buy more value than you pay in price, and you do it repeatedly. And that allows you to take advantage of compounding, which builds wealth. So why is it unpopular then? This is a big question for a lot of people. Well, number one, people would rather be told a story than be given a bunch of numbers to crunch. That's just human nature. But when I was in business school, and I've seen this in the financial press, it's just the collective consciousness that to be told that market prices are perfect. And if that's true, if the market price reflects the value, then you want to find growth, you want to chase momentum, you want to chase yield. And that's what the vast majority of people do, whether they're amateurs or professionals. And therefore they cannot outperform the market because they are the market. They can underperform it, but they cannot outperform the market because they're all chasing the same things. So this has become the only proven approach to investing that outperforms in history. And I would suggest that you learn more about it in the newsletter that I published, the Intelligent Newsletter, and maybe take this inoculation into an indoctrination. And I thank you for watching. I do hope that it took.